Alrighty, we are back for the final session. It is just gone 10:30, and this is one of the most uncertain, rangy, choppy mornings that we've seen. There is absolutely no unity of thought going on in this market this morning. As you see here, we've got a buy trade right there, pretty near the top, if you ask me, and likely to have been stopped out. Then we're in a sell trade here. Actually, that sell trade's not the worst. That maybe might have got something, but there's a good chance we get stopped out way up here as well. In fact, we get stopped out before that because we'd actually get into this buy trade around about here or at the start of this candle. Either way, not looking good and probably stopped out on that one as well. So glad that we've missed all those this morning. We obviously want the euro to start selling off and go short, get out of this range, as that's where we can actually get into a trade. This is volatile though. I mean, on the ATR, we're up at 2 pips already, so a lot of this range would be about 2 pips, I'd say. Not the easiest to trade with, so all the best to you if you have been trading the 50-200 on the 1-minute chart on the Euro US dollar this morning. That is our economic calendar on this Thursday. Happy Muharram Day for everybody celebrating that. What have we had? There's not a lot going on. Employment change in Australia. So they came in about as expected. Well, they actually added a lot less jobs, to be fair, than they thought they would. They thought they were going to add 68k on forecast, but only added 2,000. Trade balance for the Swissy came in 90 minutes ago. That was about as expected. But what could be affecting us throughout the day? Well, at 20 minutes or so, we've got the trade balance. It's on the euro, but it's Spain's trade balance. I don't think this is going to have any real impact at all. You might see the smallest spike in volume, but because Spain's economy is just a smaller part of the larger Eurozone, it's unlikely to have any real effect. 330 for the US dollar. Again, we've got numbers coming out. Philadelphia Fed Manufacturing Index and employment, and the usual initial jobless claims. Might see a bit of a spike in volume there. If there is going to be a spike today, it's likely to come from that. But obviously nothing is guaranteed. On the whole though, nothing major to watch for. We should just be able to apply the technical strategy as normal without having to think that any of these economic factors are necessarily going to drag us out. But if it is going to be one, the 330 initial jobless claims just might do it. Price hopping along in favour of the euro to the green side at the moment. It's going to drag that 50 upwards. Let's see if these Spanish trade numbers can crush the euro by any chance. So they had forecast a trade balance surplus of almost 2 billion for Spain, but it comes in at under a billion deficit. As we expected though, not having a volume spike or a volatility spike, price just staying within its usual boundaries. Also, for all the Norwegian watchers and listeners, the Norwegian central bank did just hold interest rates at 0%. Price still just kind of ranging last 15-20 minutes, getting a little bit into a high. Now it's moving. There it moves up to a brand new high again. We do want it to come down. We'd like to try and be able to get some of those losses back from the last few days by getting us into a trade. But on the other hand, no trades is also preferable to this kind of choppy market that's just disappearing off the left of screen. And these last 10 minutes or so now, we are seeing price move into new highs and new highs. A lot of green candles on the bounce there. That gap is going to widen, and our entry trade at the crossover is looking less and less likely with every candle that passes. But a steep drop-off after a bit of a cooling period is now seeing the price back below the 50 average. And already, if we see the drop continue, that 50 average starting to do that slow turn already there. And price really ricocheting in this alleyway of uncertainty here, off the 200 and off the 50 there again. We had seen a good period of time going on there where the 50 had been moving closer to the 200, but now we can see price has gone comfortably back above the 50, and that line has turned with it. If price takes off, so too will that 50 line from the 200. Let's hope we get a trade today, and it continues its run into greener pastures. It's going to be a while before that 50 comes back down now. Price just sitting in a range at the moment, hovering right around that 50 line. Not much going on with it. Price action had still been in that narrow frame there, but it's just broken up to the upside again. So where those 50 and 200 lines have been getting closer, now they look like they're going to once again move that bit further apart. And we really could not get a trade today the way it's going. Strength to strength for the euro. That run up continues. It did just dip below the 50 for a minute there, but now new highs once again, clearly breaking any resistance in its path. Back down it comes off a sharp red candle there, though there might be hope for us yet. Price has been ranging, just coming down a little bit more 5 minutes before we got these initial jobless claims from the US. 50 period moving average on a good slope down now, and here comes those initial jobless claims forecast at 380,000. Still waiting for these jobless claims figures to roll through. We can see with the Philadelphia Fed numbers, they missed with the manufacturing index compared to the forecast, but they did beat employment forecast. We're seeing the euro strengthen though. It's comfortably back above the 50 average. Not ideal after a good bit of downward pressure was put on. We did see a little bit of an increase in volume, but not a lot, as volume was above what it is now just 10-15 minutes ago. So not much of a spike from the 330 numbers. We'll keep looking out for the jobless claims figures though. It's not come through on the platform, but I did look it up and the figure is 348,000. So it is better than the 380,000. That is a win for the dollar, but we have seen euro strength coming out of it. A strong reversal happening here though, straight back below the 50 and hurtling towards the 200. It had looked promising, it really has spiked there. Price had come close to the 200 line, nearly touching it, but a big bounce and that last candle on an increase in volume takes price up a good way. But look at that, just as quick as it runs up, it comes right back down, negating the entirety of that candle. Wonder if we'll see one of those again. It doesn't know what to do, it's hopping up and down like a pogo stick. And this is exactly the sell-off we want to see right now. Big red candles coming, the 50 turns. Just recovered, but has now dropped once again, and that 50 crossing the 200 is looking very likely now. Price just living in a range at the moment. It is still below the 200 though, and those lines are getting very close together. On their current trajectories, they will still cross. The moving average is nearly touching now. Going to just pull up the ATR. And our average true range at the moment at 1 pip 6 pipettes, 1.6 pips. And look at this last ditch effort from the price to stop our crossover. Currently the blue is poking through the purple. If it closes through, that is it, we are in. So we'll be looking at 448. The blue is passing the purple and it closes there, that is our cross, we are in. We're currently looking at 1.8 pip ATR, so that would be 5.4 pips to the stop loss and take profit. We've calculated the risk in preparation of entering this trade, but it is climbing, and is it going to close through? Let's see, this is right down to the wire. We are zoomed in as much as we can here, and it has closed past it. So you can see our risk on screen now, and we're entering 2 sell trades. So let's pull up our trade here. And we can say the stop loss is going to be 54 points, and so is the take profit for that one. And then for this one, just 54 points on the stop loss. There we go. So that's a 0.25% capital risk for each of these trades for a total 0.5%. And you can see both our stop loss up there and our take profit down the bottom. So let's get selling the euro, everybody. A lot of buyers on the euro right now. This is not looking good for our traders. It does get very close up to our stop loss, about 3/4 of the way there. Oh, and there it is. Stop loss triggering once more. There's the trade there. You can see, got in right here. Not a terrible position. I mean, if we were here, it would have been saved. At the moment, it's looking like that's going to be right at the top that we were knocked out, but it's only a minute there, so price could easily get past this in the next few periods or so. And now price takes that big drop. Look at that. We're stopped out right at the top, and here comes 1, 2, 3, 4, 5, 6 red candles on the bounce. Price just carrying on its range for the last 30 minutes or so. Don't think we're going to get much more out of it today, so I'm going to call that for the end of the last session on the 5200 moving average crossover 1 minute time frame strategy. Let's round off that one trade we had today and all of our trades in the journal. Here it is then, our final journal for the strategy with that trade added onto the bottom there. Another loss. We do see a lot of red on this chart. Pretty abysmal performance from the 50-200 moving average crossover. With our trade from today, we entered in fine. It seemed okay. It was quite confident in where it was going to go. Started ranging, and then it jumped up, and it just got knocked out before it did take a big drop downwards. So a little bit of bad luck there in the sense that we got caught out at the top. But that's part of trading. Bad luck, good luck. It comes around. It maybe just demonstrates that you do need to widen that stop loss if you are going to be on the 1 minute chart. Get out there with 5 times ATR, 6 times ATR, something heavier like that. Overall, we took 8 trades. That's an average of 2 trades a day across the 4 days. Losses on 3 of the days. We had 3 losses to begin with. Then we had 1 win on a day where it trended really nicely. Then another 3 losses, and then today, obviously, that final loss. But even after all those terrible losses straight through the week, we are only down thereabouts 2.5% on our trading balance. Started just over £98,000 and finished off just below 96,000. As you can see, even with a secure money management system in place, you can just whittle down your capital over time. If you'd taken a sell trade right at the start of the week, you'd see you'd be in a little bit of money because it did keep consistently coming down from 17843 to 16963 in the end. So we did do the strategy, and as you can see, one last time, quite a lot of losses. You take it on at your own risk. Let's jump over to our final thoughts on it. It's a bit simple, which, don't get me wrong, it's not inherently bad if something's simple. If it works for you and makes you money, then hey, more power to you. But I would say often in trading, signals that are too simplistic just don't cut it consistently over time, especially when they're as slow as the 50 and the 200 crossover is. I know in the dynamic that the 50 is intended to be the faster moving average of the two, obviously, but that doesn't mean that it's fast. Some of our trades we were getting in at the peak of price because that response time was just too sluggish. Still though, there's plenty to test out with the strategy, whether that's changing the period inputs of the moving averages to be something even slower, or switching in a different type of average like the exponential average. You might want to widen that ATR distance from your entry price to give your trades a bit more room to move, or you might want to overhaul the entire money management system. There is a lot to play about with it, and I'm sure this isn't the last chart that we'll trade a moving average crossover on. But will it be on the 1 minute chart? Is all of this just the fault of the particular time frame we've been using because it's too erratic and unreliable? Are we drowned out by the inconsistency of price? What strategies are actually sustainable on something as mad hatter as the 1 minute chart? Can we legally even call it a golden cross and a death cross if it's not done on the daily price chart? We are absolutely going to find out the answers to these questions and more, as there will be plenty of the 1 minute trading chart to come. That is it. If you would like more information, then there will be some in the description. And do not forget that all strategies are tested using demo money. I am not some sort of psychopathic sociopath who is inclined to forward test these strategies with real money. But as this isn't finance advice, I can't tell you what not to do with your money. So if you are keen for the simple moving average crossover on the 1 minute chart, then dive right in. Thank you for watching. This is Project Trade. I am Trading's last cartographer from the Department of Charts and Recreation. There is more trading to come.